Most beginners lose money because they don't actually understand what they are looking at. A candlestick isn't just green or red, it's a story about buyers and sellers. And once you understand that story, the market suddenly becomes a lot clearer. In today's video, I'm going to show you exactly how candlestick forms, what each part means, and how different time frames change the way a candlestick looks. Let's keep it simple, clear, and particular. So let's say this is a 4-hour candle. That means the candle needs 4 full hours to form. Here we see the body of the candle from this opening price to this closing price. While the candle is forming, the price moves within a certain range. This range is represented by the wicks, the thin lines above and below the body. The highest point the price reached is the candle's high, and the lowest point is the candle's low. Now let me show you this range with a simple path. We start at the opening price. The price first moves down, then shifts into an uptrend. Downwards the end, the price pulls back slightly again, and finally the candle closes at the end of the 4-hour period. At that moment a new candle begins. So every candlestick is a mini battle between buyers and sellers, compressed into a shape. This candle is bearish because the closing price is below the opening price. To identify the opening and closing of a candle, we simply look at its color. If the candle is green, the lower point of the body is the opening price and the upper point is the closing price. If the candle is red, the upper point of the body is the opening price and the lower point is the closing price. Remember, a candle is simply the story of how price moved during that period. So now let's have a look at the most important candle types you will see on any chart. First we have the full body candle, a candle with almost no wick. As you can see here, there's only just the body. This usually means strong momentum. Buyers or sellers were clearly in control. At the second one we have the doji candle, a candle where the open and close are almost the same. This shows indecision, neither side could take control. And here, a candle with long upper wick, buyers tried to push the markets higher, but sellers pushed back. This often signals weakness on the bullish side. And the last candle type is with the long lower wick. Sellers tried to push lowers, but buyers stepped in. This often shows strength on the bullish side. So these simple candle shapes already tell you a lot about what the market is feeling. A bullish candle shows that buyers won the battle, a bearish candle shows that sellers won the battle. So now let's have a look on how candles form across time frames. This is one of the most misunderstood topics. A candlestick looks different depending on the time frame you're using. A 5-minute candle is made of 5 1-minute candles. A 1-hour candle is made of 12 5-minute candles. A daily candle is made of 24 1-hour candles. So now we're on the 1-minute time frame. If we keep these 5 candles in mind and switch to the 5-minute chart, we see that the entire range of those 5 1-minute candles is combined into one single 5-minute candle. Then the information from 3 5-minute candles is compressed into one candle on the 15-minute chart, and so on. This means small time frames show noise and small movements. Big time frames show structure and direction. Now let's talk about psychology. Every candle tells a story. Wicks show rejection, bodies show strength, dojis show uncertainty, long bodies show strong pressure, and small bodies show hesitation. You're not just looking at colors, you are looking at the emotional fight between buyers and sellers. Many traders lose money by overreacting to a single candle. Candles are clues and not predictions. What candlesticks cannot tell you is the part most traders get wrong, and it's important. A single candle does not predict the future, It doesn't tell you where price will go next, it only shows you what happened during that period. A candle only becomes meaningful in contexts like the trend or volume or the time frame or market structure, and candles are tools, not signals by themselves. If you understand candlesticks, you understand the language of the market. If you enjoy this and want more simple, clear trading education, please subscribe. Thanks for watching.